So we had a nice weekend with Labor Day, nice 3-day weekend, and then we got into stock trading, and the market was terrible on the first trading day of September. The Nasdaq was down more than 3%. The semiconductor space was down more than 8%. It hadn't had such a bad day since 2020 when we were dealing with a pandemic. It was just a horrible day. And it's real horrible days like that enable me to appreciate some of the investments that do really well during these times. I wanted to cover that on this video, talk about some investments that nobody thinks about. The best time to buy them is when stocks are doing really well because those investments sell off, they have good prices. And now that stocks are crashing, alternative investments, non-equity investments are really going up in price, which is why I own them, to diversify and have a good portion of my portfolio in an asset class that will rise when everything else is falling. So let's talk about that. And I hope that you get a few ideas that enable you to manage your portfolio over time. Keep in mind, I wouldn't recommend anybody to just jump in and change everything today. No, these are ideas that take time. As these alternative asset classes go up in price today, it's probably a bad time to buy because the prices are going up. You're kind of chasing the price up. It's best to buy them when stocks are really rallying. And I would encourage you to think about that. Just keep it as some notes that you can buy in the future. So, as we look at the market has seen a really good year. Right now in 2024, we're up 16% on the NASDAQ, but it has seen some pretty good volatility. Uh, about a month ago, we went through a pretty good correction on the NASDAQ, and it really rallied back, which was quite incredible, by the way. But now we've given up a good part of that rally. This volatility, I like volatility as an investor. It enables me to buy, good prices on stocks, good prices on bonds. Volatility is my friend. But what I wanted to point out is I would not be surprised if we start developing more of a crash, which would be like a 25% reduction to the stock market. It's an expensive market to begin with. And for sure in September, it feels like we're going to have a good correction. We're going to have, stock prices probably go down more than 10% overall, especially on the NASDAQ. But is it going to be a path towards something more significant? I don't know. I'm not a fortune teller. I just wouldn't be surprised. Now, as we talk about investment types, you could just Google search alternative investment classes other than stocks, and you'll get to a good list of ideas. The first list is treasury bonds. So treasury bonds are loans from the government, and government will issue out bonds. We buy those bonds. There's bonds and bills. Bills are short term, bonds are long term, and they pay you an interest rate. It's almost like buying a CD, but usually bonds pay better than CDs. You could also buy corporate bonds, which I really like because I do a lot of analysis on companies, and I use that analysis to have a comfort level around a particular company. And I know that, hey, that company is a good company, profitable, they're growing. I'm okay buying their bonds. In essence, giving them a loan and being paid a good dividend. I'll show you my bond ladder in a bit. And I'll show you that some of these corporate bonds, especially some that are deemed to be a little riskier, really pay a high return. So we'll go over that. You can keep your money on money market accounts or money market funds. Now, right now that continues to work, but I would say that interest rates are really falling fast. If you track interest rates, they really fell yesterday and they're falling again today. So money markets are going to stop working. I don't know how soon. Maybe within a year, they're going to stop working. Then there's gold. A lot of people like gold or precious metals. I totally get that. Gold has been a stored value asset for a long time. And other people like to go into other types of precious metals. Real estate investment trust. So real estate is a limited asset or resource. They just don't make it anymore. So real estate tends to stand tall during these corrections. And of course, there's dividend stocks. Now, dividend stocks, especially around consumer staples, they tend to hold their value well during these stock market crashes, and they pay you some income. It's really nice to have dividend paying stocks during market corrections or crashes because you do see positive return in that income. Values of really good stocks may be going down, and it's temporary. Over the long haul, those are really good companies. They're going to be worth a lot more. But over the near term, that dividend income really, really looks good when everything else is down. So that's a quick flyby on different types of investments to consider that are really good during stock market corrections and stock market crashes. Over a long period of time, I've amassed a bond portfolio as well as a crypto portfolio. And I'm going to cover my bond portfolio, which really is looking good today. It had a really nice rate of return yesterday. It really popped up in value. And bonds usually don't move a whole lot, but they really move up when stocks go down. And what I've done is I've tried to really set up bonds that will mature at different dates because bonds are a loan and they have a maturity. Think of your home loan. You either got a 15-year term or a 30-year term, and you agree to make your mortgage payments. And at the end of that term, you own your home. A bank or some home lender lends you the money to buy that house. That's a loan. Similar to that, a bond, either a corporation or a government or a municipality will issue out a bond, and you can buy that bond and hold it. So I have different maturity dates. Some of them maturing this year in 24, and then some maturing in 25, 26. What I try to do is just cover all my living expenses. So I'll have cash flow in the form of redeeming bonds as well as interest out of this bond ladder. Now, what I'll point out is looking at 2025, it's a bond ladder where I'm going to have a little over $99,000 of bond value redeeming. And I'm going to have a nice gain on those bonds, and they pay an interest rate. The combined rate of return is going to be 9.3%, which is really nice if you consider it's a lower risk asset and it's just going to be consistent. It's going to be safer than a stock. Looking at 2 years, this will handle cash flow coming in during the year of 2026, rate of return of 9.6, year 3, year 4, year 5. And then I have some longer term bonds. Now, the longer term bonds are riskier, by the way. You want to be careful. But the shorter term are, in my opinion, it's just an opinion. I'm not recommending you buy, hold, or sell any investment I ever cover. But if you issue out a loan to the US government, it's pretty low risk. If you issue out a loan to some of these good companies, it's pretty low risk, in my opinion. So I feel comfortable with these bonds. And again, they're really showing up today. They're going up in value. It's nice to see some green in my portfolio because there's a lot of red. It's almost like Christmas has come early, if anything, in the decorations of my portfolio. So it's nice to see green on the screen with regards to bonds. And when to buy bonds, you want to buy them when nobody wants to buy them. And that's when the stock market's really going up, when everybody wants to buy stocks. And try to buy bonds when interest rates are actually going up. So bonds have a reverse or opposite effect. If interest rates go up, bond prices go down. So it's good to buy. Buy low, sell high. If interest rates go down, bond prices go up. So your asset appreciates. Yesterday, interest rates went down substantially. So my bond prices, bond values went up. So you think about that. Usually when it's good news on Wall Street, stocks are really going up. That means that it's usually a good time to buy bonds because typically during those periods, you might see interest rates creep up. So those are just some tips that I've seen in my years of investing in bonds. I've been investing for over 30 years. I've been buying into bonds for more than 30 years. It's something that I got into quite early in my investing career, principally because I'm in Southern California, in Orange County, and probably the GOAT in bonds was a man by the name of Bill Gross, and he actually operated here in Orange County, and he would regularly be showcased as, a really successful guy, which he is. He's a billionaire. He's really accomplished, but he made bonds really work and actually have a rate of return that competed with rates of return on stocks. So I really appreciated that bonds can really do a lot of good things for an investor, and it gives you an opportunity to diversify. Diversification really comes into the picture and comes in on focus on days like we experienced yesterday, and it looks like we may experience today and maybe experience for a period of time, is that bonds will be looking good in the month of September. So that's my video on alternative investment types during market corrections and crashes. I hope you found the video interesting. I really appreciate you watching. As always, I'm just an investor, just sharing my experience. I don't provide any financial advice, and I don't recommend you buy any of the investments that I talked about. Good luck investing in 2024.